welcome Michael Blue, the managing partner of Privateer Holdings, and Christian Groh, who will follow him to join a discussion, and he's a partner at Privateer Holdings. Thank you, Michael. Good to have you.
Thanks, Jeff. Well, it's an honor to be here today to share our story and our perspective on investing in the industry. Christian Groh, who will join the stage in a few minutes, helped co-found Privateer with me and Brendan Kennedy about a decade ago. And the investment vehicle that we founded was really the first private equity firm solely dedicated on investing in the emerging legal cannabis industry. And to date, we've raised about $200 million of private capital and over $500 million in the public markets to invest in the space. And the companies that we've created under the Privateer umbrella employ more than 5,000 employees in 7 countries and on 4 continents. So in 2010, we really started thinking about whether we were ready and willing to jump into the industry, and if so, what was the right business model, and how are we planning to invest in the space. And we originally thought we were going to be a venture capital firm, and we spent about 9 months of kind of boots on the ground, doing boots on the ground research and careful diligence. And something that we discovered was that we really couldn't find any companies that we wanted to invest in at the time. So that made a venture capital fund a pretty difficult model to launch with. So we ended up flipping our thinking and ended up forming a holding company instead. And this really gave us the flexibility to go and acquire companies outright. It gave us the flexibility to incubate companies from the ground up, and that was probably the most important change to the model and to our thinking. We were focused on kind of 4 specific verticals that we wanted to invest in, and those were data and distribution in the online space, medical and pharma products, wellness and adult use products, and then a brand and IP platform and portfolio. So the first company that we acquired, and really the only company that we acquired, was Leafly, and we did that at the end of 2011. And you may be familiar with Leafly, but it has the world's largest online cannabis audience, and is really that bet for us in the data and distribution play. We founded Tilray we started on it in 2013, and it is our play in the medical and pharma space, and we ended up taking Tilray public on NASDAQ last year, making it the first cannabis company to go public on a US exchange. Left Coast Ventures is a California-based company that's focused on wellness and adult use products. And then Docklight is our brand and IP portfolio. Docklight is really focused on beverages, topicals, edible products that use hemp-derived CBD and other hemp-derived cannabinoids, really non-THC cannabinoids. So our thesis is the same today as it was a decade ago, and we believe that cannabis is a mainstream product that's consumed by mainstream people. Because of that, we believe that the end of prohibition is inevitable, and ultimately trusted brands, trusted global brands, will shape the future of the industry. Our vision is to build the world's leading portfolio of consumer cannabis brands really to create the Coca-Cola, the AB InBev, the P&G of cannabis. We really believe that it's our responsibility to show what a fully compliant, what a well-regulated, appropriately taxed professional industry looks like. And one of the key ways that we think we can do that is by creating fully compliant, reliable, tested products and brands for the industry. One of the primary reasons that we ended up starting Privateer 10 years ago was because we knew we were never going to see another opportunity quite like this in our lifetimes. It was a $200 billion industry back then. It just so happened that most of that was tied up in the illicit industry. And so really what our objective is, and what everyone else that enters the space, what their objective is to capture that revenue as it begins to move from an illicit industry into legal jurisdictions and legal markets. When we entered the space, there was virtually no competition. That has obviously changed dramatically over the last 10 years. It's a very competitive, very crowded space, but it's still a complete white space. We see that there's enormous room for continued innovation, and we see new form factors entering the market, almost on a weekly basis at this point. Something else that we found to be very interesting was that, like alcohol, cannabis is a counter-cyclical industry that is highly immune to other macroeconomic trends. So, a lot of people believe or think they believe that cannabis legalization is an American or a Canadian phenomenon. And I think business owners often get kind of hyper-focused on micro geographies and their own zip codes, and become very myopic about how large this industry is. The truth is, what we're seeing is a global paradigm shift, right? Where we're seeing a $200 billion market that has been in a state of prohibition, but is transitioning to a state of legalization. So we're big believers in brands and their ability to change the industry. We believe that brands can help to legitimize the space and to legitimize cannabis as a mainstream product. We believe that by creating packaged, compliant, tested, reliable brands with a consistent experience for the consumer, that's how you begin to eliminate the black market. It's also how you create an advantage in the future, and you're able to charge a premium to those illicit products, particularly as we see the commoditization of products in the cannabis industry, as we see the prices of the inputs come down and down over time. We really view brands in terms of a spectrum, really beginning with medical and going to therapeutic, wellness, and to adult use. We founded Tilray to focus on that medical pharma segment of the industry. We partnered with the family of Bob Marley to create Marley Natural and other Marley products that are focused on the wellness and adult use space. And then we've created a whole host of other brands in-house to focus on different consumer segments, different form factors. We also believe that products really cover a spectrum as well, starting with raw flower and progressively moving towards more refined form factors like beverages, topicals, and edibles. And each of our brands really focus on one or a handful of these categories because we don't believe that any one brand is really capable of doing everything. And now I'm going to let Christian walk us through 5 industry trends that we see really beginning to shape the future of the industry.
Thanks, Michael. Good afternoon. My name is Christian Groh, co-founder, partner at Privateer Holdings. Founded it alongside of Michael Blue and Brendan Kennedy, who's unfortunately not here today. I'm going to talk about the 5 industry trends shaping the future of emerging legal cannabis space. We spent a lot of time looking at pitch decks and meeting entrepreneurs and kind of riffing on different ideas of where this industry is going to go. So we do spend a lot of time thinking about this. Number 1, commoditization and consolidation. At the end of the day, cannabis is an ag product. So if you could grow it consistently at scale, high quality, at very inexpensive rates, that's probably going to win, on its face on the cultivation side. Some of the analogs we're seeing today, juxtaposed to just a couple of years ago. Back in 2014, when CBD was just kind of coming online and people were initially talking about it, we saw prices of roughly $50,000 to $75,000 for a kilo of 99.99% pure CBD. It was obviously hard to get. It was hard to extract. You had to isolate that cannabinoid from the other cannabinoids. So it was really expensive and there wasn't a lot of supply. There's obviously been a lot of innovation in R&D and significant operational resources going into this now. So if you fast forward to today, I could probably buy a kilo of 99.9% pure CBD on the marketplace for roughly $1,000. So you're already starting to see a bunch of price compression just on the actual supply side or the API side or the input side. That's not to say there's other interesting cannabinoids that are still holding really high values. For example, CBC, which is another cannabinoid, is still commanding a very high per kilo price, north of $40,000, $50,000. On the consolidation side, we're already seeing it, especially with the CSE publicly traded companies. You start to see the MSOs, the multi-state operators, kind of roll up amongst themselves. They're trying to build a footprint as quickly and as largely as possible. So you're already starting to see that in the public capital markets, even on the private side. We get approached by a lot of companies that are looking for some sort of life ring or want to partner with us or partner with one of our portfolio companies. So it's just constantly happening right now. And you're going to see more of it, especially with kind of the capital markets that are dried up right now. Another interesting thing on the commoditization side, we're starting to see a lot of venture dollars or capital go into other forms of creating cannabinoids. So traditionally you would grow it through hemp or cannabis, process it and extract the oil and then isolate the different cannabinoids. And there's other methods to create that molecule. For example, you could make CBD out of yeast or E. coli or algae. There's even some people using orange peel extract, which is a terpene, which is a backbone of cannabinoids, and they're actually creating net new cannabinoids from these other processes. And so if you're able to move, that decimal point, a couple spaces to the right, it's just going to change this industry very, very quickly, and that's all happening very, very quickly. Number 2, products and brands. Michael touched on this briefly, but we're big believers in products and brands. It instills a lot of faith and trust into a product if you do it right. If you went to a dispensary 4 or 5 years ago, 90% of everything sold was dried processed flower. If you go into a dispensary today, you'll see maybe a couple linear feet of dried processed flower, and then there's everything else, which are the different form factors, the different products, the different brands. There's always going to be that market for high quality, high potent, dried flower. But if you really look at the TAM, the total addressable market, from our perspective, from an investment perspective, it's a good market. But there's the TAM of all these other products and brands and cannabinoids and form factors is just much bigger, and it's global, and you can scale it faster. Supply chain specialization, number 3. If you look at kind of the evolution of the industry, obviously Colorado was a landmark state, and as we march towards the end of Prohibition, in 2012, when that was passed, they required what was called vertical integration. So you essentially, as an owner-operator, you had to completely control the supply chain from seed to sale. So a lot of these early innovators in cannabis, they had a big cultivation facility, they had distribution, and they had retail. And that was the model for the first couple of years, but now, for example, you go to a state like California, it's based off a 3-tiered system. So it's producer, processor, distributor, retailer, and within the supply chain specialization, we're starting to see a lot of startup companies, whether it's tech or just kind of traditional distribution. The one example I like to use is there's a technology company that's creating these modules where if you're a distributor or if you're trying to sell your products, the tax piece in California is very difficult, and so they have this kind of tax remittance app that allows producer, processors, retailers to make their tax remittance a lot easier. And so that was never even contemplated, several years ago. But now with the supply chain specialization, you'll see some very nuanced, clever, potentially brilliant ideas as the supply chain rolls out. Number 4, professionalization and compliance. The world is watching this space. They truly are, and they've probably been looking at Canada over the last 18 to 24 months, just because they're a little more progressive than the United States. But going forward, I think you'll see a lot of people looking at the U.S. as kind of the leader in this space. And so there's a lot of groups out there that want to discredit the space. And so it's really important to remain professional and be compliant. You've heard compliant in the last few pitches. But something simple as chain of custody and being able to track from seed to sale is very important. And we're dealing with a lot of operators that come from an illicit market, and so they're just not familiar with dealing with a compliant organization. So you'll see a lot of those people fall out. You'll see a lot of new people come in that could actually nail the compliance. The compliance is really important to us. It's important to our portfolio companies. We like to say we're a compliant-driven organization, and that's one of the reasons we've been around for close to a decade. And last but not least, CBD and other cannabinoids. We think that there is massive opportunities within the cannabinoids and terpenes themselves. We talk about essentially 2 today. We talk about THC and we talk about CBD. There's approximately 200 other known cannabinoids that haven't really been studied. One of the other companies that we are part of is Tilray. Tilray is doing clinical trials around the world with hospitals, institutions, and universities. And so they have this really unique advantage to do PK studies or trials on humans, and we're starting to see some really interesting outcomes. For example, there's a cannabinoid called THCV, which we're seeing really good, clear indications that it's an appetite suppressant. And so if you use that as an input into all the other form factors that Michael showed a couple slides prior, you could see that market gets pretty big pretty fast. And if you're using hemp-based cannabinoids to do this, you could obviously scale faster because you're not constricted to these complicated state matrices. There's a kind of snapshot of what we think about the CBD. When we say CBD, we basically use CBD as non-psychoactive cannabinoids, so non-THC cannabinoids. We think that's the size of the market here in the short term. And this is really the market opportunity. This is the real TAM when you're thinking about these other unique, novel minor cannabinoids that really haven't been studied yet. Obviously, if you're playing in the THC space, you're not able to use this as a distribution target within your platform. So we look at this juxtaposed to a chain of dispensaries. There's a handful of dispensary chains that have 30 or 40 or 50 around the country. I would much rather sell our products into this type of TAM. I'm going to stop there just based on time. I think we're going to sit down and take some questions.
Totally understand the willingness to stop. I think that's an amazing graph right there. All our entrepreneurs tend to think about channels and channel opportunities, and there's a lot of wide open space there. I wonder if, as long as we have that up, though, the pricing to hit that convenience store space, that big piece, how big a gulf is there between the ability to create products that are gonna move through that channel?
I mean, there's definitely some price point restrictions, and we're already seeing that in some of the sell-through data. I think if you price something in convenience store and gas stations above $40, retail it's obviously not going to sell. But if you do a lip balm or a beverage that's sub $8, sub $10, you're going to see some better sell-through. And obviously the margins are going to continue to compress. But back to kind of the overarching theme and thesis here. Even if you sold one product per week in 10,000 convenience stores, I would much rather look at those types of companies versus I'm in 5 MedMens. I'm not disparaging MedMen, but I'm saying they only have 5 stores versus you're talking tens of thousands.
Yeah.
So you're going to see that. You're going to see the price compression, but you will also see the expansion of outlets.
Do you feel there's opportunity for more opportunity for established brands to pull in these additives, CBD, THC, and grow from there, or is it more of an own brand strategy?
I'll take the first stab. I think there's something unique about growing up in the cannabis world.
Yep.
There's this level of compliance and legality that we've been through, and we've cut our teeth on it. We understand that supply chain very well. And as a consumer, I don't think you're going to buy a Coke with CBD. Maybe you will in 5 or 10 years, but there's something unique and novel about a cannabinoid-based company kind of rising out from the cannabis space and then entering traditional retail seems to be more the appeal than I would say a traditional brand going downstream into cannabis. And that's very early data that we're seeing, but that could obviously change over time.
So you mentioned, Michael, that over 10 years, your thesis is relatively the same. What are the biggest stressors on that thesis? What keeps you guys up at night?
What keeps us up at night? I mean, one thing I mentioned is that one of the reasons for entering the space 10 years ago was that there wasn't any competition, right? And there was an ability to come in and, along with others, really start to set the standards and professionalize the industry in a different way. And we're seeing a lot of people beginning to do that today, which is great. It's good for everyone. But there is a lot more competition today, right? And it's a very competitive space. It's a crowded space. Brands really didn't exist even 5 years ago. And today you go into a dispensary in California and you see hundreds of brands in one dispensary alone. There are, for one of our companies, Leafly, the TAM for them in terms of brands that they can sell advertising to is over 10,000, right? And so I think the growth of the industry is great for us in a lot of ways, and in other ways that creates competition for our own companies. But I think that's a good thing at the end of the day.
You lift the veil on a new industrial opportunity. You get great pitches. You get ghost stories. Now, we know that you guys have been in it for 10 years. How discerning, though, do you think the investment community is on some of the things that they're putting their money into? And what's the overall impact on our audience?
For the last, up until summer, prior to summer, for 2 years prior to that, there were no consequences for making an investment or a bet or an acquisition. I mean, you saw it in the public markets. You saw it where, especially the Canadian LPs were, just rolling up some company or some brand for hundreds of millions of dollars based on scant revenue, and it was all kind of on the come. It was all, we're going to wait till you see our 2020, 2021 revenues. There was a period of time, it was probably 18 months, where there was kind of the no consequences situation. You fast forward to today, capital markets have changed drastically. I think people are getting smarter. I think people are actually spending a little more time doing diligence, digging in. I don't think you're going to see those unwise investments, at least over the next 12 months, as there's kind of a capital crunch in place. But if there's some change in policy with our administration, we could easily flip back to that.
Yeah, the fan will go on high speed again.
Yeah, I mean, I would say we always liked to say that our Series A round of capital that we started in 2010, 2011 was the hardest round of capital ever raised in America. That I know every startup feels that way. It took us 2 years to raise $7 million. It was incredibly difficult. To Christian's point, I think capital's been readily available in the industry really until the last 3 to 6 months, and there's a real capital crunch in place. I would say raising money today is certainly not as difficult as it was 10 years ago, but investors are being incredibly diligent about really digging into numbers and models and valuations, pushing back hard, and I think investors are worried about investing at valuations that are too high today, and there are many companies that are raising capital that are willing to come down on valuation, and I think it's difficult for both sides right now to find the market clearing price to really bring in investment dollars. But we see capital out there, and we see companies continuing to close on capital today.
One last quick question. Are you saying that in terms of the big institutional markets, or are you saying that at the entrepreneurial level? Are people able to find a reasonable strike price there?
It's honestly both. I mean, you see the public companies having difficulty raising capital today. We've seen a number of potential IPOs that have been shelved or pulled back. We certainly see it for startup companies that are looking at raising Series A, Series B rounds of capital.
All right. Gentlemen, thank you very much. Are you taking investment pitches right now?
We are. We have two companies that are, actually 3 companies that are currently raising capital: Leafly, Docklight, and Left Coast Ventures.
So how do people reach you?
They can reach out to either Christian or me directly.
All right. Thank you.
Yeah.
Thank you very much.
Thanks.